What's going on, guys? In this video, I want to tell you guys and kind of explain to you guys why it is that I used a 20 SMA. Now, you can use any moving average, any EMA, which is exponential moving average, that you choose to use. Now, the only reason why I used the 20 SMA is because over the past 8 years that I've been trading, not only have I worked with new traders, but I've also learned and paid for and also studied mentors that I've personally hired or personally traded with. Again, if you guys are in Evolution Traders, you kind of know my story a little bit more or less, where I learned to trade. Good family friend of mine who, came from Wall Street, kind of showed me, the ropes here. But the 20 period moving average, regardless of what time frame that you're using, you have to look at it like this. The 5-day moving average is your short-term power trend. The 10-day moving average is your start or birth of the trade, which means typically, if we're trending over or under the 5 SMA, that's going to be your hard power trend on any time frame. That 10-day moving average is going to be the start or the birth of the trade, depending on where, if you're over or under. That 20 SMA is very, very concrete, as opposed to what the kind of macro trend is on a little bit of a bigger time frame. So what that means is if you're looking at the daily chart and we're trending over the 20-day moving average, momentum is pretty strong, you want to be trading to the long side. Same thing if you're on the 1 hour chart or the 5-minute chart or the 2-minute chart or the 1-minute chart. It doesn't really matter which chart you're using, but the 20 SMA is kind of that, it's the start, right? If the 10 SMA is the birth of the trade, well, then we need the momentum from being over or under the 20 SMA to really be that concrete level. Now, your macro supply, right? Your macro supply is going to be the 50 SMA. Now, on the daily time frame, your 50-day moving average is giving you the information that you need, who is really in control of the month. Okay, so whoever's in control of the month, generally speaking, if you're swing trading, you're trading on a little bit of a larger time frame, you definitely want to be on that side of the move. So I just had made a video speaking about the daily time frame and the 50-day moving average. Now, if we're trading below supply of the 50-day moving average, generally speaking, you don't want to buy gap ups. Just like the same way if we were vice versa trading over the 50-day moving average, you don't really want to be selling those gap downs. Now, when it comes to the 20 SMA and using the 5-minute time frame, I have been using this for over 4.5, 5 years now. It works. Okay, there is no other answer as to then it works, and it works for me, and it's very easy to see. Now, you could be using the 21 EMA, you could be using the 9 EMA, you could be using whatever it is that you want, whatever it is that works for you. But what I've noticed, I've used the 9 EMA before, I've used the 21, I've used the 10 to do these scalping moves. And over, the last 4.5 to 5 years, what I've come to the conclusion on with the 5-minute time frame is that it provides a little bit more stability, meaning that when we're trading over the 20 SMA and then we start to lose the 20 SMA, as long as we don't break a new high here, we tend to ride the move a lot longer than, say, something like the 9. So a lot of times when people are using the smaller EMAs, or you're using a different moving average, especially if you're using EMAs, those moves tend to get chopped up a little bit more. I have just found that the 20 SMA provides a little bit more concrete data to me. Again, it could be different for everyone else. It also has to do with what my level of comfort is. It also has to do with, because I've played it so much, I understand it and I trust it, right? So when it comes to day trading, especially, and especially if you're going to be scalping, if you don't 100% trust your edge, or you don't trust the indicator or the moving average, and you don't trust the price action or your ability to read the price action, it doesn't matter what moving average you're using. It doesn't matter what magic algo or what magic indicator you're using. It doesn't matter how well you read the tape or you read the price action. If you don't truly trust what it is that you are trying to follow, it doesn't matter what it is. You're just not going to be successful at it anyways. So the very simple and vague answer is, why do I use the 20 SMA? For one thing, a lot of institutional traders, again, and I hate to get into this topic because it's such a controversial topic, as opposed to, what do institutional traders trade and what do, retail traders trade and this, that, and the other. But The 20 period moving average for anyone, even your biggest retailer traders, they're going to respect it. They're also going to respect the 200. They're also going to respect the 50. For me, I like using the 20 because it provides multiple setups in a day-to-day basis. So especially for someone looking to day trade, if you want to be able to take 2, 3, 4 trades in a day, you'll get those opportunities versus, let's say, for example, you're using the 200, you might only be provided one opportunity, or for really trending in an upwards or downwards market, you might not even get the opportunity to trade it. And then there might be moves that were going on in a day that you could have traded. You know, if you look at the difference between the 20 SMA and let's say the 9 EMA, you might have double the amount of trade setups on the 9 EMA. Yes, although they might work, but you might get stopped out a little bit sooner. So again, it's a level of comfort. I like the speed of the 20 SMA. Again, remember, moving averages are all lagging indicators. So I like the speed of it. It doesn't hug the candlesticks too tight, and it does provide a good change in trend for the short term. So if we are trading above the 20 SMA and then we suddenly start to close below the 20 SMA and start to build below it, it provides a decent enough trend change to be able to get in on that move and make some money. The same thing if we were trading below the 20 SMA and we get now over it and we confirm that price action, it tends to provide a little bit of good moves to where we can catch those moves to the upside coming from the bottom. So again, the short answer, it works. Okay, it works for me. It works for a lot of other people. It's not too fast. It's very easy to read, and it's very easy to kind of decipher through. And again, it's respected. Okay, if you ask anyone who's been trading for longer than 10, 15, 20, 30 years, ask them about the 20 SMA, and they're all going to say that it's a very respectable indicator. It's a very respectable moving average. As long as you know how to play it and you know how to trade it, and you can manage your emotions and your risk at the same time, it's a fantastic moving average. If you guys are looking to learn the complete strategy on how I use the 20 SMA with the 200, as well as supply and demand zones, as well as all of my other indicators, and you guys want to get access to trade with the community, you guys want to see my screen as I share it every morning, and I'm going over it on voice chat. That way you can ask questions and we can trade the same tickers in real time. Definitely join evolutiontraders.com. That link is going to be down in the description box below. We entered into a new month of October. I normally take on a few new students each and every single month as some of the older students start to progress and get a little bit more better understanding of the concepts. We open it up to new traders. So again, it's a first come, first serve basis. If you want to be a part of it, the best thing that you can do, I would say, and then what I've done, is invest into yourself first. If you don't invest into yourself, invest into your strategy, invest into your knowledge and education, you're pretty much just a sitting duck. You're going to be spinning your wheels in the mud for a very, very long time. You need to get around other people who are doing this on a day in and day out basis and ask questions and take losing trades and figure out what you need to do to, fix your position sizing and fix your risk and fix your discipline and your mindset and fix your strategies and entries and exits. And it's good to do that when you're around other people that are doing it every single day, especially people that are doing it at a high level of success. Again, a high level of success can be making $50 every day to someone, and that can be making $5,000 every day to someone else. So level of success doesn't really necessarily mean how much money you're making, but a level of success in trading comes to how comfortable are you with your risk, how well do you manage your losers, and how consistent can you be to come in and pick your entries and exit each and every single day, so that you can be able to do this skill set for a lifetime, right? Regardless if you work a 9 to 5 or you're getting ready to retire, or maybe you even want to transition and do this full time like myself. There's levels to this. We don't just go straight to the top from not making anything or ever taking a payout to making $10,000 in a month. There's baby steps. Let's pull $1,000 out of the month 1, let's pull 2,000 out month 2, so forth and so forth. And over time, we can definitely grow this. If you guys want to join, that link is down in the description box, and I'll see you guys all in the next video.